Everybody, so it's on a Monday, and want us to do a quick recap on what did happen today. And as you can see from my charts, I have lots of things over here, but I will have to hide them, and then we can start off this session from the higher time frame, so that we may know what the higher time frame has for us. So immediately I will go to the weekly time frame, and if you haven't really watched my previous video, hopefully you can go have a watch. But what I basically thought of these of today's trading is I wanted to watch what the XY was doing, then I'll take my trade for EU, and it did play out, and we got our lesson today. So from the monthly time frame, what I observed is somehow we did have that previous month's low which had been grabbed, and we have a possible fair value gap that will be formed. So we have this high, this candle's high, and also this candle's low, which has a possible fair value gap, and we have 7 days to go before we see a candle closing. So since we have seen these previous month low, which is a major liquidity pool grab, we expect some retracements. And so since this candle should be closing around, so I'm expecting some consolidation at around that range, or some expansion going higher. So dropping to the weekly time frame, we've seen a sweep of liquidities. We have these lows being taken, and you can see there's nobody expanding lower. We did have only a week that whipped out the monthly lows and all these. Then we did reject going higher. We have these as a major liquidity pool. We also have these monthly fair value gaps. So but before we reach to these highs, we have to pass through these. So this was my low hanging fruit, and I was expecting some retracement, but we'll identify what happened. So from the weekly time frame, we either had the low that will attract the market either going lower or the high. So then I dropped further onto the daily time frame, and onto the daily time frame I noticed we were forming somehow we were sweeping the lows. Since price is ranging, we swept the lows, and I was really keen on what price was doing here. And you can see only the wick were doing the damages, and nobody closures were happening below the low, which was really to me intriguing. And I wasn't really expecting lower prices other than bullish prices because of this. So if we were to be bearish, I wanted to see some expansions. For example, after this bearish engulfing candle, I wanted to see an expansion going lower, maybe leading to a fair value gap or a displacing candle, for instance this candle. But that didn't take place. What we saw, wicking, then we were consolidating around that range, and we have this swing high that might attract the market going higher. Also have this swing low, but I think this is an intermediate term low, because we have a higher swing low on both onto the right and onto the left. We have this one and also this one, making this a protected low. So somehow, and since we are towards the end of the of the month, I'm expecting some retracements into these areas, so that as of next month we will clear all these liquidities, maybe tap into these fair value gaps as well as these order blocks. If it's possible, then we'll be tanking lower. So after identifying the sweeps, I dropped further onto the lower time frame to identify what I was expecting. So onto the lower time frame, we were forming some bullish market structure. We are forming higher highs as well as higher lows. So after sweeping the liquidities, we formed this low, then from which we've been forming higher lows. And we have some market structure shifts. We have bullish order blocks as well as bullish fair value gaps. So after identifying this fair value gap, because I watched this candle close, so as I wanted to see a drop into this fair value gap, then I see a respect of that fair value gap for a continuation of prices going higher. So after identifying that, I had my Fibonacci tool from the highest high to the lowest low. Below the 0.5 level, I wanted to see some reactions going higher. So I dropped into the 5 minutes time frame after identifying that, and I wanted to have some buying opportunities. So as price was dropping, you see we have the 0.5 level, price into that 0.5 level with this candle. We had news at around this time, and as price was displacing higher, we formed a fair value gap. So I did enter off that fair value gap, and then price shot higher. Didn't really head to take these apertures, as well as we had this as a 1 to 2, but the market reversed on us and took us out, and you can see we had a consolidation, and that's why it's really recommendable that we just let Monday do its thing, because Monday will give us the manipulation phase, and possibly will show us, will give us a direction of what we want to see Tuesday and the rest of the week to do. So immediately we're taken out, the market consolidated, then we started pushing higher, and same was for Euro USD. So Euro USD, immediately I took the sell at around that fair value gap. You can see the fair value gap after the news had played out. The fair value gap formed. I entered there. The market dropped my direction, then immediately reversed, took me out all the stop losses, which we can say was the first fake move. The market took out the low, then from there consolidated as we've been moving lower, and somehow currently the final TP, if it was a valid trade, wouldn't really have been taken, but at around this level I could have taken my partials. Then if final TP is hit and my stop loss trailed, but before this happened I was taken out, and then the market rallied to my direction. So the same applied for this EU also. The same applied over here. We had a 4-hour fair value gap from which we tapped into, and as of tomorrow, and what I'm expecting is I'm expecting to see these lows being taken, because we'll be forming what you call internal range liquidity to an external range liquidity. So I'm expecting to see these lows being taken, as well as this, as the market will be dropping, going lower. And of this fair value gap, that's where I was chopped out before the market dropped. So I think the main lesson for this, losses happen, and there's no way I was to prevent this. So it's part of the game. I followed every plan that I usually have to follow. I did everything right, but I was taken out. Then the market rallied my direction. So it's part of the game, and generally was a good trade, and I can't really complain about that. And one thing now I will say is, somehow maybe be aware of always the first fake move. They can be twice, assuming this to me was the first fake move. The market again pushed higher, dropped, then the market pushed to clear all those liquidities above before then we had a drop. But everything played out well, can't really complain. And I guess the lesson about this trade today is losses are part of the game, and it's all about now ensuring that risk management is what we should maybe, because risk management is what we have, we can be able risk management is what I guess I can draw off this trade, and everything played out well, and I guess nothing really to complain about. So until next time, guys, hopefully you'll get some lessons of this, and I'll be seeing you tomorrow for another session.